you're a business owner, chances are you've been paying attention to the recent tax reform that has made a lot of changes to your business and your personal tax deductions and how much tax you're going to ultimately end up paying. We had Dustin Griffiths, tax strategist with Insight Tax and Accounting, on the podcast today with The Money Advantage to talk about tax reform and some of the major changes that we want to be aware of so that we can best plan and keep as much of our money as possible. Some of the main topics that we discussed were the corporate tax rate and how that's come down on the corporate tax side, which is for C Corps, but how you still have a double taxation if that is your entity type. And so you end up paying tax on the personal side as well as the business side, effectively increasing your tax rate to more around about 30 to 36%. When you look at a flow-through entity, which is how S Corps, partnerships, and sole proprietors are taxed, you have a different type of tax structure where you're paying tax only once, and that's not at the entity level. It's when the business income flows through to the personal tax return and you pay taxes at the personal level. So a lot of changes there to be aware of. We talked about the 20% tax deduction that is off the top of almost all flow-through business entities and how you automatically will receive that additional 20% deduction off of your taxable income, which is your business revenue minus all of your expenses, and then you get to your taxable income. So a 20% deduction off of that. We also discussed a lot of the changes to things like expensing your meals and entertainment and how a lot of those changes will change the way that you potentially do business or networking or client acquisition and what you can write off along that process. We discussed the changes in the depreciation schedule for big equipment purchases and vehicles, and really how the laws have now improved the ability to deduct even more depreciable expense more quickly for more types of assets and have removed the 50% cutoff and are able to deduct up to 100%. So a lot of changes. This involves Section 179 and bonus depreciation. So you would need to talk with your tax accountant or your tax strategist to make sure that they are depreciating your assets correctly to maximize your deductions. We talked about some of the changes to real estate as well, specifically the like-kind exchanges or the 1031 exchange, and how that means that when you have a capital gain in one asset, you're able then to roll over that income into a like asset and not be taxed on that income. This only now applies to hard, fixed, tangible property and assets in real estate and no longer applies to other assets. We discussed many of the changes on the individual tax side as well. So this is really a podcast that you want to listen so that you can understand and gain some level of awareness around these tax changes, maybe to equip yourself to ask better questions when you talk with your tax strategist or your accountant, or maybe to give you an idea of maybe changes that you want to make in order to be able to have greater deductions and save in tax. This is where tax strategy really comes into play because it's not decisions that you can make on your own. Often, if you are a business owner, it's worth talking with somebody who is aware of the rules and the regulations and is able to help you develop a strategy that benefits you most given your business situation, the expenses that you have, and how you're set up, and be able to recommend strategies that will help you keep and control more of your money. So go ahead and send us an email at hello@themoneyadvantage.com to request more information, ask questions about tax, or to be connected over with Dustin at Insight Tax and Accounting. And we would love to be a part of your wealth and tax strategy to make sure that you keep in control more of your money. Send us an email at hello@themoneyadvantage and request that tax consultation. Thank you. Hey, thanks for watching. I really hope you liked this video. If you did, click the link in the description box below for more information. Like this video, share your comments, questions, and feedback in the comments section, and don't forget to hit subscribe to our YouTube channel.